Very interesting is even though this is the worst housing market we've seen in over 30 years now, even with all of these shenanigans, these financial hula hoops that the government plays and these nonprofits do in order to try to keep the show on the road, it's still not enough to keep things moving. We are still seeing year over year sales declines. We're still seeing the highest amount of home contract cancellations ever recorded, even though they're pumping all this stimulus into keeping the housing market afloat, which honestly, I'm very happy to see. You know why? Because finally, the real economy is starting to show its face, regardless of how much artificial stimulus is pumped into it. For the longest time, pretty much since 2008 up until present day, the government has been able to come in and rescue us, along with help from the Fed, by lowering interest rates and performing quantitative easing and making it easier for people to get loans. But now, even with all of that going on, it's not enough anymore to turn things around. They have created such a large mess that it's just not enough. And maybe, just maybe now, we're going to finally start living in the real world economy of how things are really supposed to work. And here's what I mean about home builders. Take a look at this. The Sunbelt housing markets are so weak right now that home builder Lennar, their average home price is now down 22%. And what have I always told you guys? I said that if home prices were to come down by 20% or more within a 5-year period, that to me is considered a housing crash. Well, guess what? New home prices have now come down by 22% in less than 5 years. So the new home market is officially in crash territory by my standards. And the crazy thing is the prices are likely to continue falling well into 2026 as well, because all the fundamentals that have caused these major price declines have not been fixed. We're still facing all the same problems. Unaffordability is still at an all-time high. On the most recent earning call with Lennar, the CEO, Stuart Miller, he told the analysts that Lennar will pull back just a little bit on its sales over margin strategy after seeing profitability erode further in the third quarter of this year. He says that even though mortgage rates began to trend downwards at the end of the quarter, stronger sales have not yet followed, and we have certainly begun to see early signs of greater customer interest, but it's just the right time for us to pull back just a little bit. You see what I mean? As soon as the going gets tough for home builders, they pull back. They don't come in and build more homes. They try to have incentives to build more homes because they say, well, their profit margins are too small, so we need more tax credits and more incentives to build in areas and increase the housing density and all of this, which is all good for them. Right now, Lennar's average selling price net of incentives fell to $383,000 in Q3 of 2025, which is down 9.2% from the same quarter last year and down a whopping 22% from the peak of home prices back in 2022 when they were selling the same houses for $491,000. Guys, think about that. Going from $491,000 to $383,000 in the span of just 3 years, not even 5 years. That is a major home price crash. And then you still have like these people at the National Association of Realtors, Lawrence Yun, talking about how everything is just fine and that we're not going to see a 2008 style housing crash. Well, newsflash, Lawrence, we are already seeing the 2008 style housing crash play out right now in the new home market and in many existing home markets across America. At this point, these guys are just in denial, saying that it's not happening and refusing to acknowledge the facts. And just to show you how bad this is, take a look at this chart going back to Q3 of 2018. Lennar's average selling price net of incentives is actually lower today than it was back in 2018, guys. And guess what? Back in 2018, we didn't have raging inflation. So when you adjust these numbers down for inflation, a brand new house is cheaper now than it has been at least in the last 10 years. When adjusted for inflation, not nominally, but even nominally, it is cheaper than it was in 2018. That is just wild when you think about it. So home prices nominally for brand new homes have already crashed by 22%, but adjusted for inflation, that number is probably somewhere upwards of 30, 40%. And they're saying that it just couldn't happen again this time, even though it's happening right now. In fact, Lennar's incentives averaged 14.3% of the final sales price last quarter, which is also the highest level since 2009, which means they have to put more icing on the cake than they've had to since 2009 to get homes sold. And everybody remembers what was happening back then. Oh yeah, right. We're in the middle of a major housing crash, kind of like now. The only real difference this time, if you ask me, is there's just a lot more levers that the government is pulling to try to make things look better than they really are. Paying 2 million people's FHA delinquent loans is a perfect example of it. So on a $450,000 home, that works out to about $64,000 in concessions that Lennar is giving right now. And if you just look at this bar graph here of incentives in order to get these homes sold going back to 2009, you can see we're not quite at 2009 levels yet, but we are definitely getting there, and we're already past 2011 and 2010 levels of incentives to get these homes sold. And you can clearly see the direction of this trend is nowhere but up. So it's no wonder that home builders like Lennar are starting to pull back and not build as many homes now. They say that Florida is obviously one of the hardest hit areas, which is really the hardest hit area of the entire country right now when it comes to home sales being in the toilet and prices coming down. But somehow they still believe that if mortgage rates were to just come in below 6%, that would be enough to spark affordability once again and get people back out there to buy homes. Like, clearly these guys are delusional. I mean, I think we could see mortgage rates come back down to even the 2 or 3% that we saw during the pandemic. That might get a few more people off the sidelines and increase affordability a little bit. But honestly, I don't even see that being the magic wand solution to getting home sales back to pre-pandemic levels. It's just not enough, guys. The prices are too high, and the costs to maintain a home and to just keep it are too high now. That's something that wasn't really much of a problem until the last few years. I mean, people have to worry more now about property taxes and insurance and the maintenance around the house than they actually have to worry about affording the home to begin with. If you buy the house, that's the easy part, especially if you get one of these low-income programs or nonprofit programs where you come in with no money down, essentially. That's the easy part. Paying for the house after you own it, that's a whole nother story. And I think thanks to channels like mine, more and more people are starting to realize that and are taking a more serious look at what owning a home really costs before jumping into it.